Well, our next guest says the opposite of Dan. The market bottom is in, and he's got the charts to prove it. Let's get to Chris Verrone of Strategas Research. Chris, what are you seeing?
Well, listen, I think there's some supportive data that would suggest the typical ingredients of a major low have shown up over recent weeks. And we kind of take this in bullet point form one by one, and we say, if we look at March was among the most capitulative months we've seen in history. The new low data in March was as bad as anything we've seen in about 100 years. Then you fast forward to April. The quality of the rally in April was remarkable. We had 7 days of really, really strong breadth skews, 35% rally in a month, one of the best moves we've seen in history. And when you look at those moves historically, when you get moves of this magnitude over a short period of time, the forward returns from this, 6 and 12 months in the future, tend to be exceptional. The tricky part of the call is the forward returns from these big surges over the next 1 to 3 months can be pretty random. And it kind of brings us to our third point. We're in that digestion phase. We're in that phase where the market has to consolidate some of these gains. And I think that's likely as we move through May and June. And, if we bring up the second chart that we brought along and just look at some levels, I think it's reasonable you could see this market consolidate back to that, let's call it 2550 to 2650 range. That would be about a 12% drawdown from the highs, but there's a lot of support there. And I think one thing we would see, if you saw a market come in here, the apocalyptic thinking that was so prevalent throughout March and April is going to return very quickly, and I would view that as an opportunity. One of the things we've been very impressed by over the last number of weeks in particular, and if you go to the next slide, is the risk-seeking leadership that the market's actually exhibited. I recognize things like banks have been softer, but high beta is outperforming by a very, very wide margin. Conversely, a lot of the defensive groups are off the field. Look at utilities, continue to underperform, among one of the worst groups over the last week or two. So I see some offensive characteristics, even as the market starts to pause here. I think that's I think that's pretty important. And then lastly, I think underappreciated. It's only 3 weeks ago we were talking about negative front month crude. Crude has staged a really important rally here. We've seen Brent go from 13 to 33. We've seen the entire crude curve, WTI, back above $20. I recognize that expiration is still a couple weeks away, but this is a vote of confidence that some demand is being reintroduced into the economy. So I know May and June seasonality is not our friend here. We may need to consolidate. But when you look at the capitulation we saw in March, the quality of the rally we saw in April, I at least think it's worth entertaining the idea that we've put a major low in.
So just to underscore this, Chris, you think that we've seen the bottom, but we could still see as part of this long consolidation process, which could take a few months, so basically till the fall, we could see within that a 12% drawdown.
Yeah, I think what's interesting, in presidential election years, you actually tend to see markets grind in May and June and tend to put a bottom in sometime around July. I think that's a pretty decent playbook here. There's this expectation of being very precise in this business, and I think that's a little bit of a mistake. I don't want to get too cute about the finer point. I think the bigger picture here is you don't get many opportunities with 35, 36, 37% drawdowns in stocks. You had Russell 2000 down almost 50, and I would kind of reject the idea that this has been a quick event. Russell 2000 peaked in, I think, June of 2018. So there's been segments of the market that have been in a bear market for a long period of time. And I think one of the undertold stories of the last few weeks is the momentum surge we've actually seen from small caps. You've had more small caps make a 1-month high over the last week than you've seen in 6 or 7 years. So I actually think under the surface, it's a little bit broader than people would think.
All right. Chris, great to see you. Thank you. Chris Verrone of Strategas. Tim, can you see what Chris is saying in terms of not being too cute about this when you've got this overall major drawdown in stocks?
Well, I think Chris is realistic also that you don't necessarily expect, I don't expect markets that have to hold 2850 to 2900, but that the consolidation will be not one that's a return to the lows and not one that's, he used the word apocalyptic. I certainly, the sentiment, but the positioning got so oversold. There's some other things that are happening too. I think the dollar is going to be your friend. The dollar's 3% off of what were almost 18-year highs, and maybe that was a double top around 103.5. I think the Fed is pinning the long end of the curve and I do think that rates are going to stay low. I think credit is we don't totally know the credit picture, but I think if anything, the banks have prepared the market for that. They are prepared for the credit as best we can understand. With an economy we don't know, but I would tend to take Chris' view, as I think most people know.
All right. We've got some breaking news here on Ford. Phil LeBeau's got the story. Phil.
Hey, Melissa, Ford announcing officially what we heard from GM and Fiat Chrysler over the last couple of days. Ford is going to be resuming production at its plants starting on Monday, May 18th. Remember, earlier today, the governor of Michigan basically gave the all clear for manufacturers to once again begin production starting next Monday, the 11th. Well, on the 11th, Ford will begin sort of waking up the system, if you will, starting with its parts depots, getting ready for production at its final assembly plants, which again will resume on Monday, May 18th. And by the way, Melissa, like all automakers, this is going to be a gradual resumption of production. It's not like they're going to have all 3 shifts going immediately at all their plants. Instead of 3 shifts, it'll be 2 shifts. At some plants where it's 2 shifts, it'll go only as 1 shift. And there's going to be safety protocol measures in place for all of the workers at those plants. But again, Ford resuming production on Monday, May 18th. Melissa?
Phil, thank you. Phil LeBeau. And of course, resuming production is important in terms of getting the cash flow going, Karen. And Ford recently did a debt offering successfully. Does this make the picture for Ford and the other automakers that much better? It's at least some clarity.
It's a little clarity, so that is good. And we got a little clarity, a lot more clarity yesterday from GM. I would much rather be in GM than Ford. They're much better positioned to weather this storm, however long it takes. We don't know how long it's going to take. You know, one of the flip sides of an Uber, which we'll get to, is are people not going to do ride sharing? Or are they going to want to own their own cars? That would be a positive. Hertz, on the other side, has a huge fleet of used cars. That's going to hit the market. So anyway, there's a lot of headwinds and tailwinds, but I'd much rather be in GM than Ford.